I don't think so, Tyler. I mean, if you look at the past 3 months, retail sales are up 5% on an annual basis. That doesn't sound like a slowdown to me. What I think you saw in April was a lot of, you see gasoline prices being a factor. You know, in California, when gas prices are over $4.80, that starts to have an impact on economic activity a little bit. So I think there's some of that, and also some sticker shock from, you know, people paying taxes in April. There's a lot of people that had some extra gains and capital gains from mutual funds and things like that they had to pay taxes on, plus some of the SALT deductions. People got surprised. So I think that may have played into, you know, some of the problems with retail sales for April. But I think going forward, it's not going to be anything to worry about.
Jeff, do you have any growth jitters or not?
Yeah, I think I definitely see a slowing and the credit is tightening. When you look at the big ticket items, we just talked auto sales, housing. We're seeing it's not stalling, it's not stopping, but it is slowing. So I'm starting to kind of watch that a little bit more, continuing to watch the dollar, as well as want to see what kind of moves we get from the Fed. But I'd say the dynamite for this market is definitely the TNT, and that's trade and tariffs, and we could see it every day right now.
Jamie, you said you've been on the Hill in a bunch of meetings. What's top of the mind there with everything we've been talking about on the trade front? Is it trade or is it something else? You
know, I just came out of a lunch with Doug Jones in Alabama. He's very happy that the president is thinking about delaying tariffs for, you know, auto manufacturers in Europe. I mean, obviously in Alabama, it's a big deal. But you know, it's funny. The Democrats have a very interesting vantage point. They don't like China. They think they're a bad actor, but they don't really have any solutions that they want to proffer to fix it. So they've got this secondary thing where they're saying basically we'll just spend money, and if we can't work on China, we'll just come up with infrastructure bills or whatever to spend money in the U.S. to kind of prop up the economy. So that's sort of their strategy. That's what I'm hearing more and more. And interestingly enough, lots of bipartisanship. I'm very surprised to see lots of tax policy, particularly on, you know, the pass-through deduction for small businesses. I mean, there's bipartisan support to make that permanent. There's also bipartisan support on some retirement security legislation that has been in the works for a couple of years. It's actually, some things are getting done, which is actually good news.
Shocking. Yeah, surprising.
So, Jeff, let me ask you what you're doing in the portfolios you run for clients. What moves, if any, are you making given the current certainties and uncertainties?
Yeah, well, when you look at, we've had this frothy market, which, you know, a little bit of pullback, about 4% since the highs, not necessarily a bad thing. So it gives opportunity, and I'm kind of barbelling, and we're barbelling our clients' portfolios. And when I say that, balancing growth with also some defensiveness. So on the growth side, we still continue to like technology, like energy, consumer discretionary. If I go deeper with those, you know, on the technology side, we like the cloud, we like software, we like payment companies. When I go into energy, exploration, production, as well as refiners, if I flip to the other side of the barbell, kind of being a little bit more defensive for our clients with real estate, utilities and consumer staples, and a little bit of healthcare in there.